Hello and welcome to The Chart Show. I'm Victoria Scholar. Each week I'll be sharing my analysis on 3 key stories over the past week that are getting a lot of attention among investors. I'll be breaking them down not just from a fundamental perspective, but with technical analysis on the charts as well. So this week's 3 stories are Tesla after it entered the $1 trillion club, Facebook as it reported mixed third quarter results, and HSBC, which posted a 74% jump in profits. This week, Tesla entered the elite $1 trillion market cap club. In order to do so, the stock had to see its share price top $995.75 a share. On Monday, the stock surged nearly 13% after it received an order from Hertz for 100,000 electric vehicles. Dan Ives, head of tech research at Wedbush, said this deal is another feather in the cap for Tesla. Now, it's already the world's most valuable automaker, with third quarter results last week, which topped expectations, prompting a slew of Wall Street analysts to upgrade their price targets on the stock. Let's take a look now at the chart, because after gaining close to 700% last year during the pandemic, the share price performance until recently was relatively subdued. However, we've recently seen the stock stage parabolic gains, breaking above key resistance at $1,000 a share. The first half of the year was challenging, with a downtrend that saw the share price come close to breaking below support at the 200-day moving average. However, in the last few sessions, the stock has shot up, and that's why the RSI indicator has broken above 70, a technical indicator that suggests that the stock is looking overbought at these levels. $1,000 remains the key level to watch. If the stock can trade above that resistance, that would be seen as a technical sign of strength. It's an extremely busy week for earnings, with Facebook reporting a mixed set of numbers on Monday night. Its results came in ahead of expectations, with profit topping $9 billion. However, revenue fell short of analyst expectations, but still grew sharply year on year. It now has close to 2 billion daily active users, rising by 6% versus last year. The stock initially moved lower overnight after the results, but then turned higher to close in the green in the post-market session. Let's take a look now at the chart of Facebook, because since the start of the year, the stock is up by more than 20%. However, shares have pulled back significantly from the peak at the start of September, coming under selling pressure and breaking below support at $340 a share. The stock is close to testing support at the 200-day moving average, which is around $320, the next major level to watch on the downside. If we see the stock break below, that could potentially point to a new bearish phase for the outlook, with the next significant support at $300. However, if it holds above $320, look for a potential move back up towards the most recent high at $341. If it can break above that level, that could pave the way for further gains. HSBC reported a 74% jump in third quarter profit this week, with third quarter earnings coming in at $5.4 billion. That was ahead of analyst expectations after releasing some loan loss provisions from during the pandemic. It also announced a $2 billion share buyback program in a vote of confidence for the Asia-focused lender. The shares in Hong Kong hit a 4-month high and closed up nearly 0.5% in London on Monday. The feeling is that HSBC has weathered the storm and the worst is behind it, which is why the analyst community consensus on the stock is for a buy. That positivity is reflected in its share price, with the stock up more than 40% over the last year, outpacing gains for the FTSE 100. Let's take a look at the chart now of HSBC, because shares hit multi-month high this week in London and in Hong Kong. The stock saw a V-shaped bottoming pattern in September, marking the trough after the downtrend with lower lows and lower highs that was in place since this summer. Now we've seen a recovery with gains coming back into play. The stock broke back above the 200-day moving average in October and looks as though it's closing in on the next key resistance level at £4.55. A break above would pave the way for highs not seen since the COVID-driven sell-off in March of 2020. However, the RSI indicator is above 70, suggesting that the bullish price action could be getting slightly ahead of itself, in which case there could potentially be a short-term correction before the potential for gains open up once again.